For decades, the traditional job was considered the safest financial path. Education led to employment. Employment provided stable income. Stable income supported long-term security. This model shaped modern economies. Companies offered salaries in exchange for time and skills. Workers traded hours for predictable pay, and the system appeared reliable. But beneath this stability, a limitation always existed. Income was directly tied to time. No matter how skilled an individual became, there were only so many hours available to sell. For many years, this limitation was accepted. Rising wages and economic growth masked the constraint. Careers advanced steadily. Financial progress felt achievable. But over time, the system began to change. Costs of living increased in many regions. Job competition intensified, and income growth slowed relative to expenses. At the same time, technology introduced new possibilities. The internet created platforms for independent work. Digital tools allowed individuals to produce and distribute value globally. And new income models began emerging. These models operated differently from traditional jobs. Instead of trading time directly for money, they focused on building systems that could generate income repeatedly. A single effort could produce ongoing returns. Content creation became one example. A video, article, or digital asset could reach thousands of people. Once created, it continued generating attention. And attention could be monetized multiple times. Digital products introduced another shift. An ebook, course, or software tool could be sold repeatedly. Production happened once. Distribution happened continuously. Online services also evolved. Freelancers began productizing their skills. Instead of selling hours, they sold outcomes. This increased efficiency and scalability. As these models developed, a pattern began to appear. Individuals who understood systems started earning differently. Their income was no longer strictly tied to time. Their growth potential expanded. This shift attracted a specific group of people. Highly skilled individuals who recognized the limitation of hourly income. They were not leaving work. They were leaving a structure that constrained growth. However, this transition is not without challenges. Building income systems requires uncertainty. Results are not immediate, and failure is common in early stages. Traditional jobs still offer stability. A predictable paycheck reduces financial risk. Benefits in structured environments provide security. These advantages remain valuable for many people. But the trade-off is control over time. Control over income growth, and control over financial direction. As more people evaluate these trade-offs, the workforce begins to shift gradually. Some remain within traditional systems. Others explore hybrid approaches. Working a job while building income systems on the side, testing ideas without fully leaving stability, gradually transitioning as systems become reliable. This approach reduces risk while expanding opportunity. The long-term impact of this shift is significant. Economies may move toward more flexible work structures. Individuals may rely on multiple income streams, and financial independence may look very different in the future. 3 key insights emerge from this trend. First, the limitation of time-based income is becoming more visible. Second, technology is enabling scalable income models. And third, financial strategy is shifting from jobs to systems. The decision to leave a traditional job is not universal. It depends on risk tolerance, skills, and personal goals. But the underlying economic change is clear. New ways of earning are expanding. The most important question is no longer where to work. It is how income is structured, because structure determines scalability, and scalability determines long-term growth. As this shift continues, the definition of work itself may evolve. But transforming. If you want more deep explanations about money systems, wealth strategies, and economic shifts, explore more videos on Wealth Finance 61. Like the video, subscribe to the channel, and share your perspective in the comments.